Hi, so in this video, I wanted to answer a question about foreclosures. Basically, some buyers seem to be concerned about a possible wave of foreclosures that might be coming next year in 2021, right? They've told us that they've seen some news on the internet, articles, etc. And I wanted to give you some context around this idea that I think will probably give you some clarity and hopefully put your mind at ease. So let me go ahead and show you right away. So first of all, if you notice this right now, there are literally 42% of all the homes in the United States are owned free and clear. I know if you're a first-time buyer or if you're a buyer looking to buy a property, this might seem shocking that 40% of all the homes in the United States are owned free and clear. But I can tell you that in Miami-Dade, in the last 10 years, since the last market crash, right, we're talking about like 2008, 9, 10, the bottom of the market, to 2020 now. For the last 10 years, practically half of all sales have been cash, right? This statistic is a national statistic, but I can tell you that in Dade County, it's also very comparable. Additionally, 58%, a little bit over 58% of all homes in the United States have at least 60% equity. That's a lot of equity. These people that who own their properties free and clear, and the ones who have at least 60% equity, think about it. These people are not likely to go into foreclosure anytime soon, right? Typically, somebody goes into foreclosure if they're in severe financial distress, or if they're just upside down on the property. In other words, they owe way more than the property is worth, and then they end up letting it go into foreclosure or doing some type of short sale. And the last portion here, according to CoreLogic, which is the group that basically runs the MLS, the Multiple Listing Service, for the National Association of Realtors, and they basically track all the housing statistics, is that the average equity on mortgage homes is $177,000. I can tell you that this in Miami-Dade is also very, very similar. Let me show you something else real quick. This is a national chart of the percentage of distressed property sales as a percentage of the entire inventory in the market, right? And since 2012 to now, 2020, as you can see, the number of foreclosed properties have been drastically decreasing. And nationally speaking, about 3% of the inventory on the market is foreclosed or distressed properties, foreclosures or short sales. And let me show you on a very local basis, Miami-Dade County, for instance. This is a chart. This is a statistic. This is a summary, literally a quarterly market summary from the second quarter of 2020, according to the Miami Association of Realtors. And this is for single-family homes in Miami-Dade County. What I want to show you here specifically when it comes to distressed properties and foreclosures is this chart right here. From 2015 through now, 2020, as you can see, this right here, the pink bar graph, basically, the number of traditional sales has been increasing. When in 2015, it was about 75% of all the inventory was regular sales, meaning somebody, for example, who was selling a property for $400,000 and they owed $200,000, and that's just considered a regular sale, right? Somebody who can afford to sell for today's fair market value, and they have plenty of equity to be able to achieve that sale. A foreclosed property here, as you can see, the proportion of foreclosed properties has been decreasing for the last 5 years, which is basically all we can see in this chart. But I can tell you that it's been decreasing for the last 10 years. When the market crashed in 2008, 9, 10, there was a lot of foreclosures. But that market was different because it was fueled by very speculative loans. Today, when a buyer goes to go get a loan, they have to not only have a down payment, they have to prove that their income has been stable for the last 2 years through their tax returns, their bank statements, their pay stubs. It's a very stringent process right now to be able to get a loan. But anyway, as you can see here, as of the second quarter, which is now, right, 2020, you can see here that the proportion of foreclosed properties, foreclosure, and short sales is a fraction of the entire amount of closed sales, right? These are the closed sales. You can see that it's less than 5% of all the closed sales in the second quarter and the previous quarter. And, for the last several quarters, the last 5 years, the number of foreclosures has been decreasing. And it's because more and more people have more equity, right? Just like going back to this previous statistic over here, and it's that more and more homeowners have a lot more equity. Again, 40+% have their properties owned free and clear, 50% of more have 60% equity, right? And on average, people have 177,000 in equity. This is on a national basis, but I can tell you that in Miami-Dade is very, very similar. Right now, I'm actually, we're in the process of helping a client whom we helped them buy their first time home in 2013, 5 years ago. They literally bought it for $200,000 back then. Today, it's worth about $335,000, and what they owe is about $159,000. Let's call it $160,000. When they sell this property, imagine, they have more than $150,000 in equity today, and this is a property that's a very bread and butter home, very middle class home, and this family has $150,000 in equity. The chances of this family and similar families going into foreclosure are not high. Let me show you something else over here. This is the large range of projections on future home prices from different organizations. This is from Fannie Mae on a national basis. They're saying that properties are going to increase 4.4% property values. National Association of Realtors is saying 4.3% increase. The Mortgage Bankers Association, 4%. Zelman and Associates, which is a real estate consultancy firm that consults to Wall Street basically, is saying about 3%. Reuters poll is saying about 3%. Freddie Mac, 2.3%. Zillow is saying as of July 17th that home prices to fall just 0.5% from their June peak to August, followed by a rapid recovery. So still, again, not a huge drop in prices. CoreLogic is estimating a negative 1% adjustment in prices, and House negative 1.1%. So generally speaking, we also locally, we're not expecting properties to crash anytime soon. Additionally, over here, some people seem to be concerned about the unemployment, right? So they say, of course, there's going to be a lot of foreclosures because of the huge unemployment. And to be clear, as of right now, as of August 7th, the unemployment rate is 10.2%, meaning that 89.8% of people are still employed, right? And we're seeing it with the buyers that are out there getting approved, getting pre-approved. Yes, there are some people who are unemployed. There are some people who are struggling financially, and that's not good. But I want you to see the larger picture, and it's that that 90% of people basically are still employed and can still afford their mortgage payments, and again have a lot of equity. Now here also, of the people that are unemployed over here, you'll see a bigger breakdown of some of those people that are unemployed, right? As of March, there was a huge amount in people that became unemployed, but most of them were temporarily unemployed and have gone back to getting their jobs back. Only a smaller amount of people have actually become permanently unemployed, right? Here also is a chart that gives us some context as well. And it's over here, as you can see, sometimes we'll see the headline, 50 million people have filed for unemployment. And that is accurate, but it's a cumulative amount, okay? So week after week after week after week, they have accumulated to be 55 million new filings for unemployment. But the blue line, as you can see here, these are the people who are actually collecting unemployment, who are currently collecting unemployment. So as you can see, the amount of people who have become unemployed, who have filed for unemployment, yes, it's a huge amount, but the amount of people who are currently collecting unemployment are 16 million. So anyway, I thought I'd give you some context around this idea. And now let me show you again, on a very real basis, what we are seeing on a local basis. Here we're looking at the MLS, and we're looking at single family properties in Miami-Dade County. Okay, let me show you over here. Right now in Miami-Dade County, there are active Miami-Dade single family homes. In Miami-Dade County today, as of August 17th, there are 3,969. There's 3,969 properties, single family homes, active on the market for sale. And of these, let's see how many are actual foreclosures or REOs. There are 27. Not even 1% of the inventory today in Miami-Dade County are foreclosures. That means more than 99% of all the properties on the market right now are regular sales. And the regular sales, meaning people who have sufficient equity to be able to sell today. As you can imagine, if people have enough equity, that gives them more options. It gives them more choices. It gives them more options to either create a forbearance plan, a loan modification, create some type of plan for themselves. Worst case scenario, they can always sell that property with equity and downsize instead of just letting the property go to foreclosure. So to summarize the question, are we expecting a huge number of foreclosures next year? No, we are not. As of right now, based on the information that we have, we are not expecting a huge number of foreclosures. Now, what happens if next year there's an increase of 100% in the number of foreclosures? Meaning that they double. What if they triple? Even if they tripled, as you can see, it's still going to be a minor amount of the inventory. And as of right now, there's a huge shortage of inventory, generally speaking, in Miami-Dade County. Now listen, there are of course some areas in Dade County and Broward where there's more inventory. So areas, for example, like Aventura, Pinecrest, Coral Gables, they have a larger amount of inventory with properties sitting on the market for more days. And then that in itself, when there's more inventory and buyers take a step back, that creates it shifts the market from a seller's market to more of a buyer's market. But generally speaking, in Dade County, this is exactly what we're seeing. A very small amount of foreclosures right now, a lot of people with plenty of equity to be able to sell at today's fair market price, and a lot of buyers that are eager to take advantage of the lower interest rate. So anyway, I know this was a lot of information. Hope you find it helpful. Of course, if you have questions about this or need some clarification on your particular property, your particular area, your particular neighborhood, feel free to reach out to us and let us know how we can help. And we're happy to do so. All right. So anyway, hope you guys have a great week, and we'll talk to you soon. Thanks.